Okay, folks, how are you? Good to be speaking to you again. It's the Crypto Sniper. And this is what's happened. Just give you a wee update since we last spoke. So, the BTC pump that came out of what appeared to be maybe excessive short squeeze. We were directionally inaccurate on that, but we expected a major move. We thought it would be to the downside. Then it pumped up instead. We then went into a grind. We then spotted our mini HVF structure, and it took a nice upside trade for a target from there to there. It was a nice one. It was around about the 8,000s. We got in early, just sub the 8,000, and we jogged it up to the key levels of just shy of 8,400, where it ran into previous legacy key levels of support. You could see how it was bumping into this funnel structure over here from previous upsides. It needed to wind up, grinded, kept tapping out just in the funnel, and then smashed it, and then it made its way straight through target. But then we had a confluence of areas of previous targets on bigger structures, and of course a key level of significance from the downside setup. So we just run that funnel, tried again, failed. From here we then capitulated. Note how you always break funnels with momentum. Capitulated through and a squeeze, and then a dip through, and then you run this. This is slightly bearish now on the shorter time frame. Slightly bearish. So the folks that got completely excited by a full reversion back to bull by this, I'd just say be moderate in your thinking. This is a 30-minute chart, guys. You know, it's a short squeeze. That doesn't mean it's full bull. It does mean we could be in this annoying interim phase where it's neither fish nor fowl. A little bit of a sell-off here, and this worries me slightly. So I think left shoulder over here, head, and then a rally here, weak rally, and actually I would short into this funnel area if it got anywhere near here. Short into the funnel area and suspect a pullback, and that's you got to be careful about that because it's got some levels, and you'd learn about this. And as I say, the next webinar for us, and it's going to be a totally new one on how to survive in bear markets. How interesting is that going to be? Who didn't give up of normal retail crypto traders a whole bunch of both BTC balance and even more significantly fiat balance in the bear market? How not to have your account taken off you, and how actually to thrive in a bear market. And it doesn't, it's still relevant. It isn't necessarily over. So that HVF style head and shoulders would run you down to the 7470 level. So you got to watch out for that. It's not insignificant. It could see you buying again, and then you usually get a little bit of a run and an overperformance. So you could start finding support just at this little funneled area zone here. Yeah, so you've got to watch that a little bit. We've had a good spell though on the shorter time frame. So this was, in fact, there we go, that was Bitcoin. Let's get the correct charts up. This was Ethereum. No, it wasn't. Going to the E's, that's the euro. Go watch the euro. That was EOS. That's the one I want. That's Ethereum versus Bitcoin. So we biased a little bit heavier to Ethereum around here due to this falling wedge, and it broke out. It did okay, but then it's kind of held its own and stalled. Could be giving you a bit of a flat bottom and a bit of a setup here. I think this was the chart I wanted. Where is she gone? There we go. But this is how we did. You'll learn about everything in HVF method if you were to come on board, including things like time stops. But note how we just made the target there. You see, if you don't have a target, look how much it gets taken back. All your upside. How many times have you sat in a winning trade only to watch 85% of it wash out? That low there, you're at 499 instead of your target up there at 537 when you got in at 494. How to feel like a loser and to make $3 when in actual fact at 494 you were in fact $40 up. That's not good. It has a little pickup now, but it's also going to probably be a bit leaned on if Bitcoin sells off. So if Bitcoin does its rally and then starts to sell off, this is progress decay. Once you've made your target, this is the line of efficiency. You'll learn all about this phraseology and what it means. You want a steep line. You want a steep line entry to target. That's assuming you didn't take any early entries, and you need to know on what basis to do early entries and how. And once again, you have to learn the method to do that. But there you go, nice steep line of efficiency. Look at the wind ups here. We noted them. Isn't it ironic? At a previous green level, which was a funnel level, you're probably not even seeing these lines because you're not used to so many annotations on a chart. How interesting is that little wind up target over there? Note how you pull back again. And then actually you got a little bit of a squeeze. Not traditional, but look at that confluence of targets there. That tells you you're not getting a booster. It's not going to overrun. You've got to learn all these things. How do you learn them? You need a bit of training. Note how you set up an inverted there. I showed it to you on a smaller time frame. That's a dotted funnel. Note that the rally comes in and stalls into that space. So it's there's a lot you can gain from having a methodology. Note how this target to the downside was made, and it confluenced with the previous interim level as a key level of significance. This is what you can learn if you have a methodology. Most people have nothing to hang their hat on. They don't have a time stop either. In other words, if it wasn't in a wind-up HVF or about to close to target, you should have closed from this point on. Target made, you got done. That's perfect. Many people will sit, watch it wash in. It's the selling and it's the defending what you have. It's what you keep that matters. It's not how much you can get to show up in your P&L. It's what you can hold on to. And that's a real critical point. We also did a little bit on OMG. And we said, watch out for this fellow and why, and that it was going to pop. That was actually on our last free webinar. We gave you a free try. That was prior to the spike. It's prior to all of this. It's prior to all of this way down here. And we said this is going to be forming a new trend, that this move out here is significant. And then it spiked even further. Wow, it was a big move. And then it had a big pullback and everyone was thought, that's it, that's the end. No, it's winding up. Does that mean I'm making a recommendation? No, I'm not, but I'm showing you a little bit of what we've been doing on the charts recently. And we're going to go do an amazing theory weekend in Vegas. We're looking forward to the dry heat out there and great customer service, lots of smiles, warm weather. It's all good for me. So looking forward to serving our US contingent of clients, and what a great community we have. So lucky, that's a little bit about what we've looked at crypto recently and what's been done. If the method suits you, and it doesn't suit everyone, and if you're well resourced and you're serious about taking it to the next level, developing your wealth in an environment where we have a very devious control structure up to all sorts of tricks at the moment, if you aren't building your defenses, both financial and in other preparations, you could be caught with your pants down as they move on through their agenda. That's my take. Of course, I'd say that. Enjoy your week ahead. It's a Monday release, and I hope you're having a great week so far. Best to you all. Bye for now. You can register for the webinar on themarketsniper.com only if it resonates. Speak to you all soon.